I do want to bring in Rebecca Walser. She's president at Walser Wealth Management. Rebecca, always great to see you. And
Great to be here.
What should investors make of this latest action?
Well, it's a new administration. We're obviously not even a month in yet. And we did know that he was going to bring in some protectionist policies and leverage really economic policies and tariffs specifically, Kristen, to actually fight the cartels on the fentanyl side, drug trafficking, human trafficking, certainly on the Mexico side. Canada has way less, like about 1% of the fentanyl trafficking as Mexico does. But even Justin Trudeau yesterday obviously came out and said, hey, we are providing, 1.3 billion to additional security to the actual border in order for the tariffs to be paused even in Canada. So it's really chaotic right now. Obviously, the Chinese tariffs are the bigger issue, with China coming out and saying, hey, we're going to retaliate by actually creating some antitrust probes here and putting tariffs on American goods. So this is right now sort of that tit for tat kind of scenario. And I think we have to give it some time to, I know no one likes this, right? But it is going to be some volatility, and we're going to have to let this play out for a little bit.
I think that's what investors might be looking for clarity for. Of course, Rebecca, we'll have to see how it plays out. But is there any expected timeline, or when we see tit-for-tat negotiations like this appear, how should investors navigate that in terms of making sure that they are protected and potentially diversified?
Absolutely great question. So I think anytime you have a new administration and you definitely have a sea change of economic policy, in other words, it's not like we went from Obama to Biden. We are going from the Biden administration to the Trump 2.0 administration. And this isn't a president, in my opinion, that understands now a lot more how the sausage is made than his inaugural first time around. And he also doesn't have to get reelected. So he can be a lot more bold. And he also feels like he has a mandate. So investors need to understand that is going to breed volatility for a little bit. Now, if you want to kind of pin the time frame, I would expect that we have at least 90 days of adjustment period of getting our bearings on how this is going to play out, interplay out globally between countries. So investors need to understand and expect volatility for the next 90. Of course, if you're in for the long haul, you worry about the long game. You're not necessarily worried about these little machinations back and forth. But it is going to be probably a little bit of a more volatile year, absolutely.
And so, Rebecca, what are you advising clients in terms of how they should be positioning their portfolios in this scenario?
Yeah. So we are absolutely interested in the long play for the frontier basket that we're calling, Kristen, this is basically crypto, blockchain, robotics, but really quantum computing and AI. And I left those for the end because they're so overplayed, right? But that's the new frontier. And if investors have a long runway, long horizon to get returns or to get capital appreciation, they absolutely should invest now and hold for a long term. And I don't know exactly how that long term looks. 5+ years at least, and I wouldn't call 5 too long, but at least 10. But if you are looking for short-term price action gains, you can probably do that. It's going to be more difficult early in this administration, as we see Trump is very willing to tie economic policy to basically, all the things that he's trying to do geopolitically as far as border security and migration and all of these other things.
So I want to talk about some of the fundamentals because, of course, we know over time, Rebecca, economic growth, that data, we'll get a whole host of jobs data this week as well as corporate earnings, does move the market. And in terms of what we anticipate on the jobs front and earnings, what can you tell us?
Yeah, I think that, we have at the end of last year, and if you look at the COO and the CEO sort of sentiment, Kristen, this has been the best we've had in like 12 years. We have 60% saying that absolutely they're expanding R&D. They look at that M&A activity is going to be larger. All of our big investment bankers understand that this is going to be, they're forecasting 25-30% more M&A activity. So that would tell you that we're going to have a very pro-business, deregulatory environment. However, what we're seeing at the very beginning is him leveraging tariffs internationally, and that is causing some consternation, some volatility. So it's kind of like a mixed bag because we had so much optimism economically after Trump was elected November 5th, but yet now that he's actually implementing policies, we've got CEOs and we've got a lot of auto workers, we've got a lot of people, car manufacturers calling up the White House and saying, we need an exemption. So I think that we are going to just have to expect some volatility. And so if people are really on the price action side of it and getting really quick positive returns, it's going to be something that they're not used to for the next 90 days at the minimum, I would say.
Rebecca Walser, always great to see you. Hope you can join us in person sometime here at the Stock Exchange. Rebecca's a president at Walser Wealth Management. We look forward to it.